Let's hunt for some undervalued UK dividend stocks. So the stock scanner I like to use is called TradingView. This is at tradingview.com. It can be a little tricky to set up. So here I'll walk through the settings I use to find undervalued UK dividend stocks. So we need to go to screeners here. So once this screener appears, it'd probably be set on the US market. And the first thing to do is to ensure it's on stock screener here. There is also an ETF screener, which I've covered in my other videos. But today we'll just look for stocks. So the first thing we want to do is to change market from entire world and just click on UK. Now we've got UK stocks, but there's still quite a bit to do to sort this out. So the first thing we need to do is to add a new filter, which we can go here and look for primary listing. Right, that's the one. So we've got primary listing and that should be set to yes. So now you can see we've got some UK stock. So I like to use the Williams Weekly Oscillator. So we can add this here. If you go to here and type Williams. Okay, so it's the Williams percent range technical indicator here. So we can keep it on 14, that's the standard setting. But one day we'll switch to 1 week instead. So this uses the weekly charts and we can add the filter now. You can use it on daily charts, but I have more or less proven that this indicator is more reliable on the weekly charts. So we need to activate the Williams R. So click on the drop down and first we'll use -80 and below. So we set it there. Then I'll go in again and go to manual setup and let's have a value of -90. So later in the video I'll show this on a stock chart, but basically a value of -90 or below means it's really oversold. So we'll apply that and you can see a lot of things have disappeared, some others have appeared. We're still not quite done on the filters, we need to do a bit more. So dividend yield, if it's not there then you can simply search for it. It's dividend yield. So normally it is listed because it's an important one. So what should we say? So I'll select this one between 2 and 4 and I might go in and change it again. So go to manual setup. What should we have? So I would say between 1 and 5%. Anything more and you're kind of looking at dividend traps and high yielding things that might not be good from a total return perspective. So we'll apply that. Right, so I think a few have disappeared. What else can we do? Symbol type is another good thing. If it's not listed there, then you can search for it. Symbol type. So I like to just have this on common stock. That will filter out a few other obscure things. We haven't filtered on market capitalization, so we'll do that. That can screen out smaller companies. So what should we have this? I think I would change this to between 2 to 10 billion. I think that's in dollars. Then I would go in again and change that to, I think you can have like 750 there and hopefully to 100. I think 100 billion or maybe 500. 500, that's probably big enough. Okay, so what we've got there, market cap. And note that you can sort them by different columns here. You can actually change the columns as well. Normally they're sorted by market cap. So currently BT Group is the largest UK undersold company we've got. There is another thing I like to do. Let's go to dividend as well. And I look for continuous dividend growth. And I'd like to see 5 years of dividend growth. So let's have that. Between 3 and 5. So now you see that BT's disappeared. It has a somewhat patchy history. But there are 2 here at the moment. Incidentally, if the market's quite choppy and volatile, you can hit the refresh here. It's worth checking this several times a day. If you do have an account with them, then you can save the scanner as well. So that's really convenient. You can click here and then you can see the charts. And I like to change this to 5 years. So we're kind of looking for a stock in a kind of long-term uptrend, which is just having a bit of a pullback. So right move doesn't look too bad. I think it probably will recover from there. JD, I'm not too sure about. It's kind of having a bit of a torrid time lately. So now let's add the Williams indicator onto the charts in our stock trading app. Here I'm using Trading212, but most websites should support the Williams indicator because it's a very common indicator. So on Trading212, you go to Indicators and search for Williams. Okay, so we want the Williams %R here. So once you've added it, it comes down here. And remember, we're using the weekly charts, so ensure that's on weekly and not daily. And we need to change it so that we match the scanner. So you need to click on this and settings, and you need to change the upper limit to -10 and the lower limit to -90. So we were looking for oversold as being below -90. Incidentally, overbought is above -10. So now that has changed. So now you can see that the chart goes down to below -90 when we have a dip here. So as you see, that one was really oversold, and currently at the time of recording, Rightmove was really oversold according to this indicator. So we've gone way below -90. So what are the backtest results of this indicator? Is it any good? So this chart shows the backtesting results. So the red line is the standard FTSE 100, which hasn't really done anything for the last 10 years, but it has been on a bit of a tear lately. The green line is the FTSE 250, which is coming up a bit, but it has been a bit subdued. And the Williams R, my strategy, is the blue line here. So it has been doing pretty well. It was outperforming for a while, but then we got hit hard in 2022, and it's not been doing very well lately, but it does look interesting. So bear in mind, this is a single indicator strategy, so you probably need to do a bit more analysis on stocks before you buy them. Otherwise, you can have lots of down periods here. It's quite volatile. So what I did is that I went through all the backtest trades and I picked out all the losing trades and I've categorized them in this chart here. The strategy itself was about 85% profitable, so there weren't too many. There were quite a lot of break-evens as well, so it's about 4 or 5% loss, which was pretty low, so it's not that bad a strategy, but the losses could be quite big. There were a few 40 and 50% losses, so we had pretty much no loss there because we got a few dividends. And this one was a small loss, so about 25% of the losers weren't actually too bad. The ones that I couldn't really find any way out of avoiding them were these, which was actually quite a small amount. A big red flag is dividends cuts, so stocks that cut their dividends are a big red flag. There was a lot of them, so I've tried to avoid buying them in real life. The other thing is a valuation bubble. There were quite a few of those, so that's about a third you could probably cut out if you avoided dividend cuts and stocks that are obviously overvalued and in a bubble. There were some stocks that looked to be slightly overvalued. I'm using fast graphs to pick those out. The other thing that's a bit suspicious, there were a few stocks that were newly listed. So these are stocks that I only have about 5 years data worth. They only listed on the stock market in the last 5 years. The Gore Street Energy Storage Company, that's one that went in here. That was a hideous loss. So I think this scanner is quite useful and I do check it on a daily basis. I've just refreshed it and another one has appeared, Q-Kinetic. So this is an interesting indicator, so it's well worth checking out. Remember to do plenty of other research on these stocks you're buying though, because a single indicator strategy is slightly high risk. Thanks for watching.